We are in Salt Lake City for Permissionless, and today I'm with James from Bloomberg Intelligence. Hi, James. Welcome.
Hi, Mia. Thanks for having me.
It's great to have you on. For the few people that don't know who you are, give us a quick background and how you got into the specific position of the industry.
Yeah, so I started at Bloomberg right out of college, and I covered the asset management industry. So I didn't write about, I maintained the data on mutual funds, ETFs, TradFi stuff. And then in 2017, I joined our Bloomberg Intelligence team, which is where we write research about asset management industry, ETFs, where money is moving in the TradFi markets. But I also wrote about, I started our coverage on cryptocurrency. So I also worked with our macro strategist, and he wrote a lot about gold and commodities, and he wanted to start writing about crypto. So I wrote about crypto there. And then I was eventually promoted to being just a full-time analyst. And that was when things really started heating up with the Grayscale trusts. So I started writing research, and personally, I was very interested in crypto since late 2016. So I got interested in crypto. So I had personal interest, personal knowledge, and I started writing research about largely the Grayscale trusts. And then obviously that led into my experience of talking about what's going on with what at the time was going on with the Bitcoin ETFs and Ethereum ETFs. So I spent from 2017 till 2024 writing about the odds and movements between the SEC and all these different issuers trying to get Bitcoin ETFs launched. So I'm primarily a TradFi, DeFi overlap, I guess, is my area of coverage.
It's been quite exciting to see the ETFs finally coming to life. Did you think this would be the time, like as it happened? Did you think that would have been like the timing when you looked years back?
Yeah, so honestly, since 2018, I thought the market was ready for a Bitcoin ETF. So I thought the SEC was being, I don't know, overprotective, I guess. So our stance has always been the SEC should have approved these things back in 2019, 2018 time range, but they didn't. And then I really thought they were ultimately going to approve them, but the SEC kept kicking the can down the road. But once Grayscale filed their lawsuit and I heard the opening remarks, basically the courtroom case, that's when I got very confident that the Bitcoin ETFs were going to be approved at some point in the next year. So yeah, I mean, most people on Twitter and crypto Twitter know me solely because me and my boss called that the Bitcoin ETFs were going to be approved before anyone else did. And we called the Bitcoin futures ETFs getting approved before anyone else did. And we broke the news that the Ethereum ETFs were going to get approved, even though we didn't think that was going to happen, but we were able to do it. So we've been writing a lot. We got stuff wrong, obviously, but we've been right on a lot of this stuff, fortunately.
So what would you write today? What's likely to happen next?
Honestly, what happens next? Nothing's happening until the election happens. So,
which is soon.
Yes, it's no. What are we? Are we less than 4? We're less than 4 weeks away.
Yeah.
Yeah, I mean, the next step would be like we have some issuers in the U.S. that have filed for Solana and Ripple ETFs. I was actually just with one of the issuers that filed for a Ripple ETF this week. That's not going to happen unless we get a change in admin at the SEC. So essentially, it's theoretically possible that we could get a Solana ETF and a Ripple ETF over the next couple of years, even if Harris wins. But if Harris wins, it's not happening in the near term. If Trump wins, things could move pretty quickly. So part of the problem is like this precedent that has been set for what is needed to have a Bitcoin ETF in the US and an Ethereum ETF is you need a regulated futures market. There's no law that says you need that. That's just the precedent the SEC has set in what you need to do in order to get these things approved. But all you need is a new SEC admin and be like, yeah, we're not following that rule anymore. Like that, we don't need to follow that precedent. There's no law that says we need to do this. So like a little act of Congress might be needed to get the Ripple and Solana ETFs because right now you have the SEC, CFTC fighting. The CFTC is calling these things commodities. SEC is calling them securities. Who has jurisdiction over this? So you need a lot of clarification. There's no clarity in what's going on there. So yeah, if Trump wins, he probably will put somebody at the head of the SEC that will be a lot more accommodative to crypto. And then we could get some actual rules around what's required and what's going on in this industry. Some more court rulings. I think one of the main reasons that people are filing for XRP or Ripple ETFs is because of the court rulings that we've seen. I know the SEC is appealing it, but the court rulings were rather positive in saying that Ripple itself, in and of itself, is not a security. So we'll see how far that goes up the the court system. But like something along those lines is going to be required. But right now, the SEC is actively calling Solana a security. They're actively calling Ripple a security and pretty much everything else under the sun besides Bitcoin and Ethereum. So it's unlikely anything's going to happen anytime soon with other assets in an ETF wrapper in the US. And honestly, with the failure of the Ethereum ETFs, I don't even know if you really want these other products in an ETF wrapper.
It's fair, yeah. And if in the instance of Trump winning, like what are some other good things that we might see for the industry?
Well, I mean, he's obviously, I mean, I guess we'll have to see. He's kind of says a lot of things and doesn't always back them up. But hey, at the very least, my view on this is right. If Harris wins, it's going to be at worst neutral. You're going to basically be in the same situation that you're in right now with Biden. And I think probably you'll be a little better off. Like she's going to be a little bit more accommodative, not as restrictive, because I don't think Warren is the one that's been driving this stuff behind the scenes. She's not going to have the same level of power in a Harris admin, I don't think, as she had in the Biden admin. So I think even if Harris wins, it probably will be slightly better. I don't think their election really matters all that much for Bitcoin in itself. But altcoins and some of these other things, I think, will truly matter what happens with the election. So if Trump wins, you probably get somebody running the SEC that is way more accommodative to crypto. We actually get rules, stuff that Hester Peirce and Mark Ueda, who are the Republican commissioners at the SEC, have been calling for. We need more clarity. We need to like bring these people in and set up rules rather than like it's a joke. They say come in and talk with us and we'll figure out a way to do things, and then all of a sudden they send you a lawsuit. I mean, just today they filed a lawsuit against Cumberland, who's an OTC trader of crypto. They're just going after everyone. So I think if Trump wins, you get somebody else new at the SEC, it'll be a lot more accommodative, and it will be better, particularly for altcoins, anything other than Bitcoin, in my view.
That's interesting. And for like the broader market, like those who bought ETFs, what's the percentage there? Like who's buying ETFs, and do you think that will go up like significantly next year? Will the elections impact this in any way?
So I don't think the elections will impact the ETFs particularly. I mean, actually, it might impact the Ethereum ETFs, particularly if you get some clarity around like some of the DeFi stuff that's going on Ethereum. There's probably some people that are a little worried about the way that is working, but for the most part, the people that are buying it, it's largely retail. So people just with their own online brokerage accounts are going in to buy it. Some people are selling their, they had Bitcoin on Coinbase or Kraken or Gemini, you name it, and they're buying the ETFs.
Why is that?
Because if it's on the TradFi rails, so for some people, you can do better estate planning in the regular trad. They're used to everything being in the TradFi world, right? So younger people who have a lot more like they're actually in the DeFi world, they might not get as much use out of the ETFs. But also, even if I've talked to people who are like as on-chain gets, and they own these ETFs and things like their IRAs, their tax deferred accounts, because that's the only way to get like their 401k type money into crypto, so they can buy these ETFs directly that way. So even people who have their own stuff on cold storage and are used to using DeFi type protocols, they're even buying these ETFs. But for the most part, it's a lot of retail. There are some advisors. Advisors are the people that manage the wealth advisors of many other people. They have trillions of dollars in them. So whether you're talking about registered investment advisors, so small RIAs, or like wirehouses, think like Morgan Stanley, UBS, Merrill Lynch, those big types of banks. They have trillions of dollars that they manage wealth for. And they're kind of like small buyers right now. We'll say like 5% of the assets in the Bitcoin ETFs are from the wealth advisor type, but that's growing. And people think, oh, well, that's not great. That doesn't look that good. But honestly, that's more money than any other ETF that has only launched less than a year ago has ever gotten from advisors. Usually there's like a 3-year wait before they can buy these things. So they want 3 years of track record. They want a certain number of assets. They need a certain level of liquidity and trading volume before they'll even consider buying it for their clients. So I think over time, those are going to be the big buyers. No matter what you do when you look at ETFs, the biggest users are often those wealth advisors. But right now, the other big holder of the ETFs are hedge funds, actually. And it's not because everyone's like, Millennium has bought this, Ken Griffin's Citadel has bought the Bitcoin ETFs, and people on crypto Twitter were going crazy. But one, they're market makers, so we don't know how long they're actually holding these things for. So we get this data, and it's just as of the quarter end, and we get the data on a delay. So they might be out of it by the time we even see the data. So that's one. But two, what they're doing really is it's an arbitrage trade. It's a basis trade. So essentially what they do is they'll short the futures contract, so they have to deliver Bitcoin at the end of a month, so it rolls every single month, and then they'll go long the Bitcoin ETF, the spot ETF, and then they make the difference. So whatever that difference in price is, there's no risk to them because they own the Bitcoin and they're going to have to deliver it at the end of the month. And there's usually like there's a slight curve, so they're just earning like basis points, percentages, like little eking out little returns, but it's not. They're not like actually long Bitcoin. They're not like necessarily believers in Bitcoin. Maybe they are, but it's also that's a good thing. It's making the market more efficient. They're arbitraging away any differences in price.
Does it signal more trust in the industry in some way?
The ETFs.
Yeah.
I honestly the hedge funds. So the one thing I will also add is like they bring legitimacy to the space is what you're talking about. So like also like if you're a big institution, if you're an endowment, a pension fund, I mean we do have the Wisconsin pension fund has invested in some in the Bitcoin ETFs. One thing like having all this liquidity, having these hedge funds there, providing and trading these things, it's almost like chumming the water. Like if you want to get these big institutions in and they're going to buy Bitcoin and they're going to do it on the TradFi rails, because it's unlikely that any of these big institutions are going to do it on the DeFi rails. They're unlikely to like manage their own coins. That's just not how they're going to operate. But having all this trading volume, having these hedge funds involved is like chumming the water when you're going fishing. Like they're there and it's not necessarily going to mean money's going to come in, but having that helps more money come in because it means they'll feel safer. They can get in and out because it's super liquid, and they trust that it's being priced efficiently. They're more likely to trust that it's being priced efficiently.
I don't know much about traditional finance, but like when you discuss this like next to say other assets, like how does it look like for the standard investor?
Yeah, so a lot of people like here at this conference, they probably have like a majority of their net worth in some sort of digital assets, whether it's Bitcoin or Ethereum or what have you. But like for the most part, those wealth advisors I was talking about, these institutions, they're not going to put that level of allocation. What we're seeing now is they're doing like usually the typical portfolio is 60% equities, 40% bonds. And that's like usually where you get to like when you're retiring. If you're younger, it'd be way more equities and less bonds. And then usually there's this you usually take some of a slug off of either end of that, and you can put money into alternatives. So sometimes it's like hedge funds or private equity, venture capital, you name it. And one of those slugs is alternatives like commodities and cryptocurrency. So for the most part, we're seeing the people that are investing, the advisors that are putting their clients into this, they're doing it at like 3% of their client portfolio. So if they have a client who said they'd be open to adding crypto to their portfolio, specifically Bitcoin, typically right now, it's going to be only 2 to 3 to maybe 5% of a portfolio. It's not like they're putting 30% of their entire net worth into these assets. It's just they're putting a little tiny slug of it. But that adds up. Like I said, those big banks, those wirehouses, the Merrill Lynches of the world, the big wealth platforms, they have tens of trillions of dollars. So even if you only get 10% of people that are interested in adding crypto and they only add 3 to 5% of their assets into the Bitcoin ETFs, that's still tens of billions of dollars that would come into these products, which would be net buyers of Bitcoin. So they'd be buyers of your bags, I guess, is what that's why a lot of people are like upset because they're like, yeah, happy that BlackRock is launching ETF and everyone's kind of like in the crypto world, like, we don't want this. This goes against the ethos of crypto. But at the same time, they're like, okay, you know what? Do it. Buy our bags, pump our bags. So it's a nice dichotomy.
How does like investor, I guess, like psychology, what would need to happen for sort of like these people to all of a sudden start allocating more money towards these ETFs and crypto in general?
So I don't think it'll ever be like huge allocations. The only way that the people will be able to justify it is either the client specifically asks for it. So if you're an advisor, you're not going to be like, I think you should be 50% in Bitcoin. I'm sure there's plenty of portfolios out there and research that like show like a higher allocation to Bitcoin can actually increase your Sharpe ratio or risk-adjusted return. So basically for the risk-adjusted return is basically saying you got this much return, but how much risk did you take? How volatile was it? Part of the problem with Bitcoin is it's extremely volatile, and some people don't like that. So that said, we're already seeing, when I talk to people who are dealing with those advisor types, people at Bitwise and BlackRock and Fidelity, for the most part, people are dipping their toe in the water with 1-2% allocation, and they're adding to it. So it's kind of a thing that's gradually happening over time with people that have already gotten into it. They tend to add rather than take away. And I think that's what's going to happen with the Ethereum ETFs too. So we're seeing consistent, pretty regular buying of the Bitcoin ETFs. So we're at like $18 to $19 billion of inflows since they launched in January, which is a lot of money. It's a lot of money.
Yeah.
And Ethereum has negative outflows since they launched. But I think eventually, once things settle down a bit, we'll start seeing the same kind of action in the Ethereum ETFs that we see in Bitcoin. Not to the same level, I don't think they're going to get $18 billion in inflows in the next few months, but I do think we're going to see people, they're going to diversify by adding Ethereum to their portfolios. I just don't know how high that number will go. I think most people are staying around the 5% level at the top end of exposure to Bitcoin, to crypto, at least in the US and with what advisors are thinking about doing.
That's interesting. Is there like an obvious reason, or is more opinion based, like why people would be more interested in a Bitcoin ETF than Ethereum?
I think there's like 10 different reasons, I think.
Okay.
Yeah, so I'll try to remember all of them. But essentially, I think one, Bitcoin's a much easier narrative. It's digital scarcity, digital store value, digital gold. Like that's all very simple to explain. Also, everyone has heard of Bitcoin. Like it's very well known. And if you're an advisor, you've heard about people filing for a Bitcoin ETF since 2013. So
Okay.
like and also a lot of people like that aren't in this world, when they hear cryptocurrency, the only thing they think of is Bitcoin. So like Bitcoin and crypto are synonymous to a lot of people, even though a lot of people in the industry would say Bitcoin is not crypto and whatever. So I think that's part of the problem. Whereas Ethereum, it's a little more complicated. Is it a decentralized app store? Is it the backbone of DeFi? Who knows, right? Like it's a technology. It can do a lot more than Bitcoin can do. So I think it's a little complicated. I think these advisors and the people that are buying the Bitcoin ETF, they just got comfortable trying to understand Bitcoin. They spent months, if not years, trying to wrap their heads around it. And then we had the Ethereum ETFs get approved like 4 months later. It was almost too fast. Like I think that's part of it. Like people aren't ready to like figure out what this is just yet. So I think honestly, the Ethereum ETFs probably would have been better off if the SEC just denied them in May and then ultimately approved them sometime in later this year or early next year. It probably would have been better for the uptick in demand or uptake of Ethereum ETFs. The other problem is when you take Bitcoin and you put it in the ETF wrapper, the TradFi world, you're losing utility, right? It's not your keys, not your coins. You can't really send it, but you can hold it. But like, what do you do with Bitcoin? You either hold it or you send it. So you only lose sending it. When you're with Ethereum, you lose a lot more utility by putting in the wrapper. So like you do a lot more things with Ethereum, right? Whether it's like dealing with NFTs or smart contracts. There's a whole host of different things you can do with Ether as like basically gas, right? So I think one, you lose utility. And the other one that I think is really big is the staking. So I said there's definitely some people that took money from like whether they had Bitcoin in a cold storage wallet or they had their money on like a centralized exchange like Coinbase or Gemini or Kraken, and they put it into the ETFs. If you have Ethereum and you're staking it somewhere, like why would you take it off from being staked, lose some of that utility, put it into an ETF wrapper where you're literally, one, not going to be able to stake it and earn that yield, and two, you're going to have to pay. Like there's a fee to hold it in ETF. So there's like, that's one. And the other thing is Bitcoin ETFs, when they were launched, after BlackRock filed, you got to realize Bitcoin was trading around $20,000. So that helps spur the bull run in Bitcoin. And if you look at what happened, Bitcoin was the only one running up because there was a lot of betting and buying on the idea that the Bitcoin ETFs were going to get approved, and they got approved into a bull market. And then as they were approved and money poured in, it spurred. So it like shot up, and it was like a flywheel of momentum. So that was really good for the Bitcoin ETFs. Whereas Ethereum got approved while Ethereum was in a massive downtrend. It launched in the middle of summer. There was very little interest. There's the doldrums of July, and people like sell in May and go away type stuff. So there's just not a lot of action going on. So there's like, I probably forgot something in there too, but there's a whole host of reasons why I think the Ethereum ETFs didn't do as well as they did. I mean, our house view was that the Ethereum ETFs over the first 6 to 18 months would do something like 15% to maybe 25%. My number, I thought they would do 20% of the flows that Bitcoin ETFs did. So Ethereum is like a third the size of Bitcoin. So I discounted a bit for all those reasons we just talked about. And I thought they would do 20% of the flows. There'd be enough interest for it. they're negative. So they've done negative some percent of the flows. And I actually have a few bets with people where I'm going to have to buy them burgers at PubKey and things because the Ethereum ETFs flop pretty hard so far. But we still got a few months before I'm officially lost, but I'm taking the L.
Sounds like timing is a very key component here.
Yeah.
So, what is something that TradFi might be missing out for being like, I guess, like slow to get on the ride in terms of joining crypto? What are they missing out by not tapping into right now?
Yeah. It's weird. Like there's a lot of TradFi people that they've hired a lot of DeFi talent. So you look at the likes of Van Eck, they're doing a lot of stuff with real world assets tokenization. Wisdom Tree has a bunch of tokenized funds on their app, so they're using blockchain for that. BlackRock is doing, so you got to realize there's two things. These asset managers, these TradFi people, they're not necessarily full bore into the DeFi world. What they're doing is they're building bridges across TradFi and DeFi. So if you look at these ETFs, if you think about it, all it really is it's taking this DeFi asset, Ethereum, Bitcoin, what have you, and putting the TradFi ETF wrapper around it. And then all of a sudden you can use DeFi on TradFi rails, right? And then, but what they're also doing, the likes of Franklin Templeton, Van Eck, Wisdom Tree, BlackRock. BlackRock's the perfect example with their BUIDL fund, right? They're doing the exact opposite with that. They're taking this old world TradFi asset in the form of a money market fund where you can earn yield on your cash, essentially, and they're wrapping that, they're tokenizing it, they're wrapping it with the DeFi wrapper so that you can use that TradFi asset, the TradFi fund in the DeFi world. So I think TradFi, it's not that they couldn't, I mean, they obviously could learn some things with DeFi. I think DeFi is showing that they could have learned a bunch of things that TradFi learned many, many years ago. But there are a lot of these asset management firms that are bullish on crypto and DeFi and blockchain. They're going to be at the center of the intersection between TradFi and DeFi. And somebody needs to build those bridges. Not everybody is just going to be completely on chain from the get-go. Everyone in the world right now, for the most part, is mostly on the TradFi rails. So you're going to need to build bridges where you can connect the two.
Yeah, if the rest of the world leans more towards DeFi and the US is then like trying to play catch up because of these guardrails, do you think that there might be a chance that if that was to happen, that TradFi would then feel like one behind, and two that they need to play catch up on all of this?
One, I think they will have to play catch up at some point, but honestly, they have so much money and manpower that they'll be able to get their way back into it. It's just a matter of will they have enough time to do it, I guess. But also, like, if you're thinking TradFi, one thing I think about all the time is like the stable coins. 99% of stable coins are US dollars. So
Yeah.
I think the TradFi world, specifically in the US, can lean on that. I think they're going to have to play catch up. There's a lot of stuff that's going on in the DeFi world that's just so fast. But yeah, I don't know. I don't really have like a really strong view on that. I think, like I said, I think what TradFi is good at right now and is going to be good at is building those bridges. But they're building. I mean, they're testing out plenty of stuff. They have they're using blockchain not just for trading. They're using it for like there's things called transfer agents in the TradFi world, and it basically just keeps track of who holds different shares in an ETF. And it's like manual process. People and technology do it, but it's kind of like a blockchain is perfect for this.
Yeah.
And so there's a lot of companies, like I said, Wisdom Tree, Franklin Templeton, that are basically testing out. So they're using the old school way of keeping track of things and trading, but they're also alongside running a beta project using like I know some of them are using Stellar and different things to like basically test out using the DeFi application. So there's a lot of firms out there that are cooking up different things. Fidelity is also a very good example. They've been involved in the space forever. So I mean, yeah, they're not moving fast and breaking things, but they're paying enough attention. And I mean, some of them will fall behind to the wayside. I mean, there's a lot of TradFi asset managers that were eaten up and weren't ready for the ETF movement. And I think there's going to be TradFi people that just aren't ready for this DeFi movement. They think it's a joke. But there will be plenty that make the move.
Yeah, I was speaking with someone from one of these companies you mentioned last night, and it actually sounds like they're pretty ahead.
They know what they're talking about.
Yeah.
One of the things that like when the SEC kept denying all those ETFs in like 2018, 2019, 2020, people on crypto Twitter were like, the SEC is so dumb. They don't understand any of this. And like I can tell you, I've been on phone calls with those guys back in like 2018 talking about the Bitcoin ETFs. They know their shit. Like these people, they may not like you may not like to hear it, but they really do know their stuff. I'm not saying they can code up blockchains, but they understand what's going on behind the scenes. They're very smart, and these companies tend to have a lot of money, and they hire very smart people to advise them on this stuff. So yeah.
Okay, let's play the optimistic scenario here for the ETF specifically. Trump wins, and so XRP gets a chance, maybe Solana. What would be the timing there, like in your opinion?
Yeah, so if Trump wins, he gets into office the end of January. I mean, even if first thing he does immediately is appoints a new SEC commissioner, which that's not going to be the first thing in his mind, I don't think. Let's say, but also you got to realize like when Gensler got appointed, it took like 7 months before he actually was running the SEC. So like it could be a long time before he's running the SEC. So one, we don't know how long it's going to take to get a new commissioner in there. The other thing is like once you file an ETF, there's 260-ish days before you would get approved because it goes through this process of basically they keep it's if you follow the process, I tweet about it all the time. There's like 3 different areas where you can approve, delay, or deny, and they almost always delay 3 times and then approve or deny on the 4th deadline. So even if somebody filed right now, nobody has filed these 19 before. So the filings we've seen right now, there's 2 types of filings. You need to file a prospectus or S1, which is like the paperwork that says this is how the fund operates. These are all the parties involved. This is what it's hold. This is what it can do. It's all the legal paperwork. That needs to be filed, and there's this division at the SEC that needs to approve that and say this is good to go. There's also another filing called the 19B4, which is what, if you follow the space at all, that's what determines whether an ETF is going to get approved. That's basically requesting the SEC for, can we change this rule so we can do this? In the case of the Bitcoin and Ethereum ETFs, can we change this rule so we can list an ETF that holds Bitcoin or Ethereum? In the case of Solana or Ripple, it'd be Solana or Ripple. No one has filed that 19B4. So you're gonna, even if somebody filed now, you have 260 days before that could potentially get approved. So we're looking into well into the, probably the middle of 2025 at the absolute earliest, and I think that's probably even bullish. So I think you're probably looking into the back end of 2025, assuming everything goes as completely smoothly as possible, and somebody files a 19B4 within the next couple months after the election. So absolute earliest would be late 2025, I think. And even then, I think that's probably optimistic.
But according to what you said, the earliest is probably not the best for the industry, but rather the timing. What would be the best timing here?
Well, actually, with those, I think it'd be fine because the problem with the timing of the Ethereum ETF was like, we just got Bitcoin, now we're getting Ethereum, and it was too close and people didn't have enough time. I think there's enough time for people to kind of wrap their heads around Solana and Ripple. And also, as we've seen, the demand really just isn't there for any other asset besides Bitcoin in the TradFi world. So I think TradFi just likes the idea of digital scarcity more than they like the idea of, it's almost more like a tech play if you're buying Solana or Ethereum rather than Bitcoin is more like a hedge against currency debasement type of thing, which people, I mean, theoretically, Solana and Ethereum could be that. They could be considered money. But for the most part, they don't look at it the same way they look at Bitcoin. So Bitcoin just has a bigger space of mind in the TradFi world, I would say.
Yeah. What are some external things that might play as sort of like stressors that would impact the speed of this? So still assuming that things play that way, something maybe perhaps in a different country or related to other politics across the world that could potentially put some pressure.
Honestly, no other, it doesn't matter what any other country does because people were saying that all the time because Canada had the ETFs long before we did. Europe has had Bitcoin ETFs for many years now. They had ETNs back in 2015, which is a little different, but essentially they're ETFs that trade over there. So, I mean, they have Solana ETFs, they have Ripple ETFs, they had FTX token ETFs in Europe. So they have all that stuff over there. And the SEC and the US government just did not give a shit. They don't care. So there's nothing that would happen outside that could impact it. But I do think like the crypto industry can shoot itself in the foot. I think the FTX saga, what happened with, countless things, 3 Hours Capital, Luna, like all of that really hurt like the progress that was being made in DC. I think there's still a lot of progress. There's a lot of money behind the crypto industry, but I think the crypto industry can shoot itself in the foot if we keep having complete blowups like that. So that would be the thing that could slow it down. I think we'll probably get a stablecoin bill in the near future. I think there's a lot of bipartisan support for getting some sort of laws on the books for stablecoins. It's funny, I was talking to a lawyer while here, and they were like, technically speaking, like we have money transmitter laws, we have everything we need. You shouldn't really need any more legislation for stablecoins that are already legal. I'm not an expert on that, but yeah, I think that could help spur some things. I mean, no matter how, like, you're exporting dollars around the world, that's a net positive if you're the US government, right? So I think that'll get done. I don't know what else would spur it positively. I mean, the really only thing is, Trump winning would be way more net positive for the crypto space. Harris wouldn't be great, but also it would depend on who's running the SEC. Are they going to be like, even if Harris wins and put somebody at the head of the SEC that's slightly more accommodative to crypto, that's going to be a huge win for the industry. So all of those things could be catalysts, but other than that, I don't think there's much. I mean, launching futures markets, the regulated futures markets, that could help like ease some things. But the problem is the reason that we don't have Solana's futures market or Ripple or other things is I think it has to do with the infighting between the SEC and CFTC over whether or not they're securities or commodities. And you would have to fight that out if somebody tried to launch futures contracts tracking them.
So perhaps a matter of it just needs more time.
Time is going to be on the side. Yeah, I said absolute best case scenario is end of 2025 that we see another asset and ETF wrapper in the US. I mean, I think we're not far away. Ultimately it's going to happen. It's just a matter of how and when. And I think we're not far away from index of crypto product ETFs in the US. So holding like Bitcoin, Ethereum, Solana, Ripple, Aave, you name it. There'll be an ETF out there that an advisor can go in and just click to get broad-based exposure to the crypto economy. And I don't think we're far away from it. We're likely going to get our first crypto ETF that holds Bitcoin and Ethereum at some point. So yeah, I know Hashdex has filed for that. We're waiting on response from the SEC on whether or not that'll be approved, but so we're getting there. On
the broader spectrum, do you have any hot takes or wild predictions for next year?
I don't really have that many. I don't have any hot takes on the crypto industry.
Have you seen any specific behavior or like something that's being brought up more recently?
Honestly, I think the one hot take is I think the crypto industry should do more to kind of police itself.
Okay.
I guess that's kind of a hot take. I think it would go a long way if we did more to like police ourselves and come up with more like standards for like launching tokens and what disclosure should be there, because there probably should be some sort of a disclosure regime. I'm trying to think of another hot take that I can come up with. I think the Bitcoin ETFs are going to have 1 million Bitcoin before the end of the year. That's pretty interesting. So right now they're just about 920,000 Bitcoin and rising. I think they're going to have 1 million Bitcoin. So they might pass what everyone estimates Satoshi's coins around 1 million. I think Bitcoin ETFs will be the largest, US Bitcoin ETFs specifically, will be the largest holders of Bitcoin in the world. Okay. Probably by the end of this year, possibly. Maybe not the end of this year, but definitely by the end of next year. The trend is there's a lot of money that comes in and some of it goes out a little bit, but for the most part, over time, the trend has been consistently, yeah, there's hiccups with outflows and things, but for the most part, it's just going up.
For everyone watching, where can they find you?
Easiest is Twitter, JSEYFF. I write research on the terminal. All of our stuff is behind a paywall, so you need a Bloomberg terminal, which is a stupid amount of money. But for the most part, I do share probably more than I'm supposed to on my Twitter when I write research about the crypto industry specifically.
James, thank you.
Thank you, Mia.
Hey, what's up?
But it's not something Genzio is afraid of.
If you want to survive, you got to build a hive.
No, we do not understand.
Ladies and gentlemen.
We're back at the Genzio Media House.
Awesome. Thanks so much for joining us today.